Hey, welcome to the Closing Beat, everybody. Happy Monday to you. How you doing out there? Hope you had a good weekend. It's probably better than ours. Stormy, rainy, windy, just like cloudy and sticky. A little cold, I guess, but all was good. We made it through as I knew we would. We are financial advisors here at Jazz Wealth, and first off, we'd like to say congratulations to Morgan Brennan, the beautiful Morgan Brennan, having been made it 10 years at CNBC. It's been a pleasure. Yeah, invite me on your show. You know what I mean? I have stuff to offer that most men don't. So just I'm just saying, throw it out there. If anybody knows her, shoot it out there. You see. While other advisors are playing checkers, we're playing chess over here. And actually, we're losing a client. After talking to this client, has been a client for a while. They fessed up. They told me about an unbelievable amount of bad debt that they have, and there's no way out of it but to liquidate their account and go pay it down. Otherwise, they will never be out of debt. So sometimes that's the answer too. The strategy is not glamorous, but sometimes that's necessary. Last week on our Wine and Wealth, if you're interested, we talked about donor-advised funds and all the, geekery and stuff wrapped around that, how you can use them, and the time is running out because you may need to do something before the end of the year. Speaking of end of the year, real quickly, clients, if you are a client here at Jazz Wealth, your end-of-year conversion deadlines are not the end of the year. Every custodian brokerage firm out there will suggest a day before the end of the year to give them time to process. Please note that that is the case. Once we pass that date, I cannot change the date. All right, let's talk about the stock market here. Did you see the Fed today? The Fed, whoa, what's different? The Fed was desperately trying to change things here. They were trying to slow the stock market, and since that looks different, I'm going to go like this. Here is your S&P. Of course, the Fed makes their announcement. Everybody's like, yeah, rate cuts are coming. Stock market takes off, and they were trying to change our mentality. How can we tell that? You read between the lines here. They had a Fed president come out and say, we really aren't talking about rate cuts. That's a lie. We know that's a lie, and actually not a lie. They're just doing what's known as jawboning. Cover that in a second. That directly contradicts Jerome Powell last week, who said, we've begun a general discussion about cuts. So you can't have somebody come out later and say you're not talking about cuts. They did this because they said, whoa, you guys are getting too excited. We do not want the markets to go that fast. It didn't work. So on Friday, they put out another member. It says, I think that we're probably just looking at 2 cuts next year, not 3. Just whatever they can say to try to beat the market down. That didn't work. So this morning, the beautiful Loretta Mester, Fed president, who is retiring, I believe, literally said, I believe the stock market, is a bit ahead on cuts. They've done everything they can, So Economics 102 teaches you that one of the Fed tools that they have to sort of, make you guys think different things is called jawboning. Jawboning is just a way of them using phrases over and over again and getting all of them to spread out and say things to get you to understand what they're thinking. They tried. They tried, Didn't go well, though. So they're working on it. Not perfect every time. The S&P here. So on the screen, you see the S&P, 7 weeks worth of gains so far. It's not really a record, but it's still impressive. Shooting for week number 8. Remember that the S&P is quite extended here. However, since it's the end of the year, you have this slowing of news. You have this slowing of economic stuff. We only had one real interesting economic report that came out today. And that's pretty much it. So you look at the stock market and you would normally say, okay, that looks like we're extended here, due for a pullback. I'd either like to buy the pullback or bet that there's going to be a pullback, whatever you do. This time is a little different because the volume starts to drop off. The activity, participation, the economic news, the catalyst that could cause a further rally or a pullback really just kind of goes away for the holidays there. Bonds already into the holiday spirit. It looks like they're still very strong, and rates obviously at near lows there that they've been in a while, but not much movement over there, whether you're looking at the short term or the long term there. If we bounce on over to crude oil, it's trying. Do anybody want to bet on that? We talked about this last week, that maybe now you could kind of get excited about thinking that maybe there's a possibility of a bottom here in the short term, but that's a tough one for me. If you look over at gold, It was a nice attempt last week to try to recover from some of this very, very steep pullback, that middle finger we've been talking about, but nothing's really happened there so far. The NASDAQ today being led by really the big names, and that's okay. Normally I would get a little frustrated by that, but your Amazons, Nvidia, you had Alphabet in there today. Strong day. That's really where all the action was. Meta, it was kind of one of those days, just go with what we know is working. Type of a day. We'll cover Costco in a minute, but that was one of the other exciting ones there. If we look at the Dow, same thing, very extended. However, why would it just fall apart? Think about what has to happen there. People that would sell now have to, if it's a taxable account, they have to report that gain, which we know they have a gain, on their taxes this year. Right? So then they got to pay tax here in just a couple months when they file their federal return. Whereas if we just wait 2 weeks, really, in a couple days, the market's closed anyways. So if we wait 2 weeks, then I can pay tax in a year and 4 months. So I've got more time to have losses to offset them or find the tax money or do whatever. So it's this mentality that nobody needs to sell. Sure, some people may want to sell a little bit, right? If you had a tax loss because you bought a house and lost money, or I don't know, you got a capital loss elsewhere, maybe you could sell a little bit. But the masses, throughout any index here, we know you have a gain. So it's really tough to suggest that there will be a bit of a pullback that could really mean anything. Hey, internationally also, it's been really strong. We don't often talk about this, but if you want to look, let's do Canada, right? It's not as pretty, but Canada back to highs there. So it's going well for them. I put a few others here in the G7. In fact, all the G7 names are either at or above their highs there. You got Germany. Back to highs there. If you look at Italy, same thing. I'm just showing them on the screen here real quick. France, there we go. Almost back to highs there. In Japan, which we'll talk about in a second, also back to highs. So around the bigger part of the world, also nice little rally there. Like I said, expect that as the week progresses, it's going to get kind of quiet. We might just hang out and share Christmas stories or something, because that's what likely happens. And then next week as well would be pretty much a snoozer with a slight bias to the upside. Historically, that's the way things go. So I thought we'd take a quick look here before we get to stocks in the news. The average performance by weekday. We haven't done something like this in a while. Here we go. So this year so far, the best day has been Monday, actually quite strong. Average gain 0.27%. So if you had to pick a day that you wanted to be in the market, you didn't want to miss Monday, or you drastically underperformed the market. Tuesdays and Wednesdays turn to be pullback days, which follows through with, if you're one of our clients, go into the portal and can't think of what you would search, but I actually did a massive study on which day of the week over the long run, would you want to invest? And I'll give you a hint. We say it's Tuesdays and Wednesdays there, if you like buying cheaper, right? And so this year that actually played out. Tuesdays and Wednesdays offered you the cheapest opportunity in terms of a one-day move, but then Thursday and Friday show the nice little rally, Friday being second place there for the best day of the week. So beginning of the week and the end of the week, the average gain on a particular day here, again, this is the average, is 0.09%. This is a high average, right? It ties for 2010 for the highest average on a Monday. Now, remember a few things if you're going to go back and try to verify this. The stock market was not always open 5 days a week. Right? It wasn't until 1953 that the stock market started actually being open Monday, Tuesday, Wednesday, Thursday, Friday, barring any kind of holiday there. So you got to make sure that if you're going to study something, you have to stop at 1953. You're going to get some really skewed data. I've seen one of you do a video out there that was nowhere near accurate, and that was the reason why. You just didn't know it. Anyways, over 75, let's do it this way. Yeah, go to the S&P here, and if I come back, all right, it's not the greatest, but just over 75% of all Mondays this year were positive. Right? I mean, there's a 1 in 4 chance that it was not going to be a positive Monday. So really, really cool there. That officially is a record. You got to go back to the late 80s, Beverly Hills Cop days, right? There's a new one coming out. You got to go back to Beverly Hills Cop days. Late 1980s was actually where the percentage of Mondays being positive got to like the 70s, but didn't quite get above that there. Not quite to 70, I should say. So pretty cool. Anyways, let's move on. I'll take your questions if you have any while, and we'll let the stream catch up. But let's do Costco. Did you see that? Oh boy, Costco easily beats their earnings. Sales up 3.9, almost 4% there. Margins overall, which is important. You run a business, you want good margins. Margins were up because it was cheaper to ship stuff. That was basically the thing there. Membership. We always look at memberships here when we follow Costco because it's a members club. 72 million members. That's up almost 8% there. 92.8% renewal rate, which is strong. That's historic for them. They do a great job there. However, they're going to be raising prices. And remember, they said it's not a matter of when, or not a matter of if, it's a matter of when. Those are their actual sort of comments there from earnings. And then, of course, what stole the show, Costco, once again, coming out with the special dividend. They are paying a special dividend if you own the stock of $15 a share. Last time it was $10 a share. So if you work for Costco, you guys are the ones that really kill it here. If you work for Costco and you've got Costco shares, I have a client that's an actual millionaire and works for Costco. He's not high up, like big guy. He's in the store. Special dividend of $15 coming your way. So really, really cool to see that again. They just keep delivering. All right, Adobe, they're going to stop their merger agreement with Figma. That was something that they were working on for, it feels like, a long time now, but that's done. Apple, Chinese government banning the iPhones, tit for tat sort of a thing going on there. Southwest Airlines, remember last year with them during the holidays, the travel issues? Well, they got fined $140 million, and they said, we're never going to do that again, promise you. And lastly, we're losing a bit of history here. United States Steel. Have you guys ever seen The Men Who Built America? Kind of a good show, and one of them is, of course, focused on Carnegie. I don't know how you want to say it there. But United States Steel is being sold to a Japanese company, Nippon Steel, $55 a share. I don't know the time frame of this, but Cleveland Cliffs, I think, offered $35 a share, $34. Some of you probably work for them. $55 a share. So what's really going on here? Well, remember when Trump was the president, he said 25% tariffs on anything coming from steel, coming from Europe or Japan. Biden took over and said, that's probably a little bit stiff there. He said, no tariffs on the first 1.25 million metric tons of steel. Everything after that, we're going to put tariffs on. And, well, apparently, a Japanese steel company said, then we'll just way overpay for one of the American staples here in the U.S., United States Steel, and it won't matter. It's cheaper. Right? They can get around all of that. You're going to hear lots of questions about, is it still U.S. steel then? Like, when it comes to the Inflation Reduction Act and all that, are we using American steel, or now is it Japanese steel? Do I still get the credits? Oh, wait a minute. So I don't know how all that'll go, but that's in the news, and it's a tough one. That's a tough one there. All right, I'll take your questions. If you have any questions, I'll pop this out so I can see your questions there and expect that it's going to start slowing down in the stock market there. Yeah. See Costco today. Well, there you go. We covered Costco. Now you know there. Ooh, a high of 35. We need to do Guess the Dow, do we not?
Yeah, your winner from last week was Thomas C. with the guess of 37,223. So congrats to him. He's not a client, and you just can't see me, can you? But yeah, he'll get a $100 gift card.
Well, you sound great.
Thanks.
Bubba. Bubba.
Oh,
I was looking for Bubba and Tammy.
Yeah. No, Thomas was ended up being the winner out of that group.
Not that I don't like Thomas, but I was just checking it out. Well, congratulations there. If you want to play jazzwealth.com/guess the Dow. Going on TV might corrupt me. Maybe. I might, keep my hair trimmed up, shave a little bit. I don't know. I won't change my clothes for you, though. Promise that. A lot of floor stockers who are... Yeah, that's what this particular client was telling me. And it's like that for Publix, the grocery store that's kind of in the real southeast here. Same thing. That's really cool. I mean, you work for it. Don't get me wrong. Those people earned it. There's no question about that. You like BJ's Wholesale better? All right. Not doing as well, but yeah. Yep. Eric biting his nails yet on the hard landing bet? Yeah, I don't know. No, I don't think he's biting his nails for other things, but I don't know how we're going to decide that. You know? We'll see. Walmart was the same way. Nice. Nice. Well, we've got probably a lot to talk about throughout the rest of the week. Just market activity. If you see what's called either inside days or narrow range days, those are called indecision days. If you're one of our clients, go to your portal and just search candlesticks. There's only 13 candlesticks on a daily basis that you can have, one of 13. And the 3 that we are most likely to see this week are called indecision days, unless there's some catalyst or something pops up that we just can't foresee. But other than that, expect more Fed talk as they try to slow things down. I'll be here, of course. And you guys enjoy the rest of your day or evening. Adios.
Ferndisch